Oh, what happened? Okay. Jack Schwager. 20 years ago, when I was a freshly minted immigrant, I wanted to be a stock trader. And I read your book, Market Wizards Top Trader. And that sent me into a journey of day trading for almost 10 years. So you have greatly influenced my life. Now you just published a book called The Unknown Market Wizards, which I'm sure is going to inspire a new generation of stock traders. Jack, welcome to the podcast.
Thank you.
So, Jack, well, I have been following you for many years, but I'm sure most of my podcast listeners don't know who you are. So, can we start by you telling us a little bit about your background? I know that, yeah, from the time that you decided to start interviewing traders, and then we take it all the way to now.
Sure. Just a brief background. Probably best known for the Market Wizards books, which have been translated, I guess, into 20 languages or more. I don't know. So it's pretty global. Um, I also have written other books on the markets, which are more analytically oriented. As far as the career, day jobs, I spent over 20 years as a research director in futures for some of the largest brokerage firms. I spent 10 years as a principal in a hedge fund advisory. And more recently, I co founded a trader platform site which provides performance analytics and allows traders to link their accounts so they can be verified, and that's called Funseeder. The site is funseeder.com. So that's about as brief as I can make a 50-year career.
Okay, and you were a trader once yourself?
I'm sorry.
You were a trader once yourself?
Oh no, no, actually, so that's a people always assume that I am a trader. Well, I trade, but I don't define myself as a trader, and I certainly don't define myself as a market wizard. So for me, trading has always been an adjunct. It's because I fell into a career in markets as an analyst. It seemed natural to also want to trade, and that's what got me started on trading. But trading was never full time. It was always something I did, on the side. And about, I guess, about close to, almost maybe 17, 18 years after I entered the industry is when I started the interview process for the Market Wizards book. I had previously spent a sabbatical writing an analytical book, which gave me a profile, and I got approached to do more books, but I didn't want to do more analytical books. So I had this concept, and I did the first Market Wizards book, which when I did it, I assumed would be the only Market Wizards book. But as it turned out, it wasn't.
And the first Market Wizard book, it was because you were inspired by these traders that were being so successful at the time?
Yeah, I knew some of them. And, I knew they had extraordinary performance. And I figured, gee, doing a book like this is a great excuse to try to pick their brains. And I also thought it was a fun project to go around the country and interview the best traders, both of which ended up being true. So that's what motivated the idea. I guess was the idea of improving myself as a trader, and this seemed the way of doing it. I also had high ambitions for the book, but that wasn't the initial catalyst.
Right. And as a young writer, uh, I wonder, how do you get access to these top level traders? Because let's say I send an email to John Simons today, he's not going to even answer. His secretary is not going to even answer me. So how do you get access to these people?
Yeah, well, to be fair, I don't always. I mean, I
Mm.
always wanted to interview Soros. I was never able to get through to him. Um, Jim Simons is another one that I tried on a couple of books that I did. I invited him. I saw if he'd be willing to do it, and um, the second time he at least thought about it for a week or two, but declined. So it's not always easy. I don't get everybody I want to. Uh, but now it's easier because this has been the fifth of Market Wizard's book over the last 30 plus years. So now it's easier. Well, now this one, the last one, people people not only know who I am, but I'm talking about managers or traders, but in a number of cases now, or it's probably more common for me when I request interviews that the person I'm asking has read one or more of my books. And in many cases, the book ended, lots of times the book ends up in, just like in your case, inspiring them to become traders. And so I'm always find, and it actually leads to an oddity. I find myself in this peculiar position of people mentioning my book when I'm interviewing them, and of course I'm biased not to include it. So I finally evolved to a rule. But if somebody says, you know, didn't know where I was going, and I went down to, somebody, I'm thinking of one particular interview when somewhere in Eastern Europe he goes down and he looks for a bookstore, he finds some pushcart for books, pulls out this book, Maret Wizards, and that book ended up determining his career. So something like that, if it wasn't my book, I'd put it in, because it's a good story and it's important. So that's my criteria. If it was somebody else's book, if I would put it in, I put my own. I leave the reference in. If it's just a reference without any particular importance, then I don't include it.
Right. Okay. I mean, your book, Interview with Successful Traders, is not the first one in the market. It's not the only one in the market, but it's the only one that is always constantly mentioned. To what do you attribute that your book has had so much success above the rest?
Well, I know there's been a lot of Me Too books, and the only one that really irritated me is some years ago somebody actually had the gall to not only copy the format but to use wizards in the title.
Mm.
That I thought was a step too far. I don't remember the book, but I really thought that was a pretty low move. I think, look, writing books with most of my wizard books, most of them are the interview section. I mean, there's the beginning narrative, there's conclusions, there's some other chapters, particularly like a concluding chapter with lots of lessons. So there's other elements, but the heart of the book is the interview section. Now, I personally, don't like interview articles. I mean, if I see an article and it's an interview format, I often skip it. I don't like reading the format, but I think, which is hard for me to say because I use the format. But what I try to do in my books is use the format to mold as a kind of a stepping stone to get a narrative, and of course lessons about trading. But it's very important to get the narrative, and so you wouldn't get interviews like this if you went in with a list of questions and you weren't paying that much attention to the person, and then you'd ask the next question, and you get a Dudley, you get a deadly dull. Dudley's a combination of deadly dull. You get a deadly dull, text that way. So I always go in, and I don't go in with questions. I just have a conversation, and I listen to what the people, what the person I'm interviewing is saying, and probably 90% of the interesting material comes from my listening and picking up on something they said, which goes off on a tangent or a tangent on tangent. And that's how you uncover the interesting material. So I think it's the way I do the interviews, number one. And number two, I just don't take an interview and transcribe it. That would, first of all, each chapter would be 400 pages long. And second of all, it would put you to sleep. So I try to get the essence of what the people are saying. I try to get their story. I try to make it interesting reading. If I use their exact words where that's possible, it's not always possible because the way we speak does not transcribe well to the written page. I remember how shocked I was to see transcriptions, how bad they were. And I interview some of the most brilliant people in the world. With rare exception, if you just took their verbatim, everybody sounds illiterate. We don't finish sentences. We have multiple run-ons. We talk about 5 things in one sentence. It's a mess. So, and a lot of you're doing an interview, not all of it's interesting. So a very big part, like you shoot a film. So you might shoot 100 hours of film, or 200, and you'll just pull out 1% of that to use in the film. I mean, obviously, if you use 200-hour film would be deadly as well. So you have to editing is really the crux of it. Editing and formatting it, and all the while making sure you stay true to what the person said and as close as possible to their voice with the
Right.
exact words when you can.
Right. Okay, since I've been following you, I know that you have been playing with the idea of writing this book, The Unknown Market Wizards, for a long time. But can you share with the listeners what is it that inspired this particular subject of people who are unknown in the trading world?
Yeah, so the idea came when we formed Funseeder, which my partner and principal, he's the CEO, it was his idea, Emmanuel Valori, sort of mentioned it to me and asked if I wanted to, join him with it. And I said, on the research side, in terms of, you know, being in charge of the analytics and things like that. He's more of a business guy, a marketing guy, and I'm more of an analyst and a trader, and that type of thing. So it was a good where we had no overlap, so that was good. Anyway, he had this idea. He told me about having the central spot on the web where traders worldwide, not just the U.S., but emphasizing worldwide, could go in, link their account, their brokerage account, to the platform. The platform would then update every day, and it would create a verified track record. Not verified, I should say, legally, but verified in the sense that we got the results directly from the broker. So we make no legal claims about them, but they're different than results people post on their own, right? And also providing traders with a platform where they can analyze their performance, generate equity charts, generate underwater charts, even do stuff like technical analysis on their equity curve. So, and the idea was to provide that for free to draw trading talent. And the way of the monetization concept was went through changes, but we've ultimately evolved now where we realized that it was very inefficient for us. We had a separate company called Funseeder Investments. It was very inefficient for Funseeder Investments to try to do the allocation, because there's so much infrastructure, so many legal fees, it made no sense for a startup press for capital to try to do that when there are multiple firms with billions of dollars, multi-billion-dollar firms that have all the structure, all the legal in-house, everything they needed to put together a fund or whatever, or like we have an index, so to create a product based on the index and so forth. So we are now in the process of negotiating with some large entity firms to ultimately monetize this, and if successful on one, or there are two major ones, but there could be more that we're talking with, and either one or certainly both could provide deep pockets of allocation. And so from that point on, people going on Funseeder would also, they wanted to be discovered, to manage money, this would be a way. And so that leads to the book, the idea of the book. The idea of the site was there are people out there who trade very well, but just don't have the right pedigree. They're in the wrong country. They're not in one of the Western developed countries. They didn't go to Princeton. By the way, did you get a chance to read the book, or the newest one, or not yet?
No, I haven't
Okay.
read it yet.
So right. So in the last chapter of this book is kind of the epitome of the trader we had in mind of trying to find. So this particular trader, and it's called the Bellhop Who Beat the Pros. So by the chapter title, you can tell he's a bellhop, right? But he's in the Czech Republic, not exactly a center of finance. He went as far as high school, finishing high school. By his own admission, he didn't even have particularly good grades in high school. But then he had a career as a bellhop working for 10 years, and he kept on seeing these rich businessmen in the hotel in Prague, reading the Wall Street Journal. And he thought, gee, that would be a nice way to earn a living, right? Sit there and read the journal, call up and put in trades. So he ultimately tried it. And the first time, of course, he lost money, but then he took a half a year to deep research and developed a methodology that was effective. He's been using it now for 15 years, and he makes money almost in every quarter, certainly a very large percentage of quarters. He's annualizing in the 30% area, and he's never had any big drawdown. So that's the kind of trader we're looking for. So when we started the site, the idea was that I would eventually do a book, on these type of traders. And in fact, 4 of the traders in this new book did come from the Fun Cedar site.
Okay, so you just mentioned this person, and in particular, I was hearing the story. I heard the story before, and now my question is, how fundamental is education in order to become a good trader? Because I know that there are people who go to Princeton and they don't become good traders, and I know other ones who don't finish high school and they manage to put together a discipline that makes them successful.
Exactly. So it runs the gamut. It runs the gamut from people like Pavel in this new book, who, like I said, went no further than high school, to people the other end of the spectrum. You have people like Ed Thorpe, who, when writing his PhD in physics, decided he didn't know enough math, took graduate math courses, got his PhD in math, never wrote his treatise if he in physics, finished it at least. Otherwise, he would have had a double PhD in math and physics. So that's and brilliant. He developed the Black-Scholes model years before the Black-Scholes, the mathematical equivalent of that model. He was trading it for years before it was printed as an academic article, and he did a lot of other. He created a lot of other strategies that led to whole hedge fund sectors launching on his ideas. So you run the gamut in terms of very little education to absolute, to PhDs at the highest level, an absolute genius. Now, like you said, there's people who may not even go on beyond high school, but they have a skill, a knack. They find a way to make money in the markets. So I think it's this odd thing where, in one case, it's a very difficult problem, but in another case, it can tap into people who may not have the academic smarts, but have some other type of smarts, some other intuitive sense on trading in the markets.
And how much is it to have a skill, and how much is it to be able to master your own emotions? Because I may have, bullet points of list to follow, but if I pull out at the last minute or get in too early or too soon, you know what I mean. So how
Yeah,
much is it
absolutely,
emotions, and how
absolutely.
much is
So I think that mastering your emotions and uh, keeping track of what you do wrong and reviewing those points, and also what you do right. I don't mean just what you do wrong, but what you do wrong is more important than improving. And to periodically review it, and to be conscious anytime you break the rules, which you shouldn't. But if you do, at least you're conscious of it. And when it doesn't work out again, it reinforces it. And over time, you end up making the same mistakes less and less. Hopefully, you reach a point where you don't make certain mistakes ever again because you've learned that's not the right thing to do. So mastering emotions and being being centered and not being overwhelmed by emotions or even influenced by emotion, but being cold and calculated in executing your approach and knowing your risk management and having the discipline to do all of that. Sure, that's all critical. Um, as far as skill, though, I mean, everything I mentioned is critical to being net profitable. You could be, all those things can help you be net profitable. They might help you be very profitable. In some exceptional cases, it can lead you to be, you might become a market wizard type call, but that's the exception. So there's definitely a skill element, but you do have to do things right. And doing things right is like the prerequisite. And then there are people who just have an exceptional talent for trading. And it's inborn, like one of the traders in this book said, uh, I somehow have an unbelievable knack on getting out. And he can't even explain it. He just, he times his moves well, he goes in big, and then he has a sense of just when to take profits. And And actually, in a few traders that I've seen in this book, one trader sat me down and we talked all day long, and at night he was kind of fading. We stopped, and he showed me his multi screens, and he was just showing me some of the trades we talked about. And he had, the thing about the 10 to 1, 10 bagger, uh,
Yeah.
concept. He had trades that made 50 to 1, and you look at some of these trades. He like the buy point he had is like right near the bottom, and he got out on the distribution top. So just having that much, you know, it's not luck for sure. It's a type of skill which can't always be verbalized. I mean, he can tell you why I got in, why I got out, but somebody else can use the same entry and exit concepts and never do that.
Right, right. Okay, so as far as I know, when the people around me, at least, they get into trading because they start watching the news and they hear, oh, Tesla, has gone up 300%, and Bitcoin is going up, so I'm just going to buy it. So most people get into trading because they listen to some talking head on TV, and then they just follow whatever they're saying, and then of course they don't know exactly when to get out, and that's when they get big losses. So imagine a 19-year-old kid comes to you and say, Jack, I would like to be a trader. What series of steps I should take in order not to just follow the talking heads on TV?
Right. So first of all, turn off the TV. In fact, one of the traders in this book uh, specifically explained how he uses talking heads as a contrary indicator. So unless you're going to use it as a contrary indicator, and that takes skill, it's not just doing the opposite of what they say. Then turn off the TV. So what do you need to do? First of all, you don't get educated to be a trader. That's not part of the education process. So you have to learn on your own. Now, you may be lucky and find a mentor to teach you certain things, and that's great. But keep in mind, it's very, very likely that whatever mentor you find is going to be using an approach that will be a complete mismatch for your personality. So ultimately, you have to kind of still figure it out on your own. Well, let's say you don't have a mentor, which is true in most cases, and it's not always positive to have one. You start by reading. And so, what do you read? Well, just do some research, see what books got have traders say help them. Uh, Experiment with reading books on fundamental analysis, technical analysis, psychology of trading, whatever, and see what resonates with you. See what what you feel comfortable with, right? And then you focus in more on those. And let's say you kind of read fundamentals and technical. Some people will say, "Oh wow, this fundamental, this is really the way I want to trade." Some people will say, "No, I don't know, I don't want to do that at all, but I really like this technical side." So it varies. Or people may use both, whatever. But once you've kind of decided what you think you're comfortable with, start looking at markets, start following markets with the concepts you learn. See if you can make new rules or learn new patterns that you can identify, and start developing ideas of when to take a trade and when to exit and how much risk to use. And when you're at that point, I always advise paper trading. Now, paper trading is not the real thing, because until you're trading real money, once you start trading real money, it's like everything goes out the window, right? So, but still, if you can't make money paper trading, then you're certainly not going to make it, in real life trading. So first, you have to determine that you have a method that actually, on balance, works somewhat, and then you can start with a small amount of money. Always start with a smaller amount than you've been inclined to, because most people will lose the first time around, and you might as well lose less on your initial lessons.
Right. Okay. Another thing that I see quite often is you cannot open the internet without seeing some kind of advertisement or some guru promising you, I don't know, 50% return per year. And then they claiming that they beat the market every year. Of course, they never show the real returns. So I think a lot of people fall prey of these scammers. I and at the same time, when someone reads your book, that person may get a misperception that trading is easy. So, but of course, the only reason why you are interviewing these persons is because they are outstanding. They are top of the cream. So, can you just give us a sense of how easy or difficult it is to become a good trader or to be in generally beating the market?
Yeah, so you raised two good points, okay? So let me take them each in turn. The first one was really about seeing all these advertisements and things. And yeah, I guess the conservative ones claim they only make 50% a year. So the I don't know what percent of people out there are legitimate, but there's certainly a lot of people who are just trying to make a quick buck. Let's face it. And I had my analytical one of my analytical books called A Complete Guide to the Futures Markets. I have in there a section where I talk about beware of the well-chosen example, because every article you see, every ad you're going to see, they're going to show you this system. We bought here, we sold here, we bought here, and even if it's, first of all, the arrows could be made up. That's when somebody's purely cheating, right? But even when it's true, any methodology, you give me any chart, some algorithmic, set of rules that will do very well with that chart. It may lose money on most other things, but in that, you can always, in fact, it's almost impossible not to be able to make a profitable system given some past chart, right? So when people are they're seeing what is a cherry picked situation. It's not representative at all, even if it's true. Like I say, a lot of it may not be true, but even if it's true, it's certainly cherry picked. And so that's always been one of my beefs about, not only things being sold, but just articles being written. I remember to this day, and this was way back in my career. At the time, I had a partner, and I would come up with system ideas, and he would program them, and so we were working together. And I was with a brokerage firm. In fact, some of the systems were being put out every day as trading signals, right? So we were doing that type of research, and I read this article, and it showed a simple crossover moving average system. And with this phenomenal, just had an example of a Swiss franc, and in 1 year it made like $17,000. And I remember thinking to myself, gee, all this really is two moving averages, and we tested moving averages, but he has a short-term moving average here of only 5 days. We never tested that because I always thought that was just wouldn't work. Did I really miss something? Is it possible that if you use a really short-term moving average? So we ran the results. Of course, the Swiss franc was the best market by far, but that was not it was the best market. It was the best. I mean, the second best market may have made me 3,000. The majority of markets lost money on the system, but if you read the article, you think, wow, this is an amazing system. And in fact, I remember feeling bad because our systems were so much more complex. And I said, boy, this simple system is that much better than our systems. Of course, when you did an objective test across multiple markets, you found out the system was garbage. But if you read the article, you'd think you found a money machine. So yeah, beware of the well-chosen example. Now, the other thing you asked about, people get an idea that it may be too easy to make money in the markets. And yeah, to be fair, that's a misconception, of course. It's difficult to develop a really good strategy. But I think if you read the Market Wizards books, it should disabuse you of the concept that it's easy, because so many of these people who did phenomenally well initially lost all their money.
Right, right.
In this book, chapter 2, the contrarian I mentioned, he blew up his account twice, not just once. I mean, completely wiped it out. And the second time, he had gone from 100,000 to 1,000,000 or whatever. Along the way, he bought himself a Porsche, which was fortunate because when he wiped out, he lost everything in the account. And if he hadn't bought that car, at least he had the car left. If he hadn't bought the car, he would have lost that money too, because he hadn't learned risk management. And it took him more than a decade before he became profitable. And lots of traders, that's the case. And so I think if people really read the interviews or the chapters with wide open eyes, they won't necessarily come away with the idea that it's easy.
Right. One more thing. So all these people that you have interviewed, of course, they are top of their line in their game. What do they do when they retire? Do they put everything in cash? Do they buy the Standard and Poor's 500? Do they hide it under the mattress? I mean, or do they trade for the rest of their life?
Yeah, the honest answer is I don't know because I'm always interviewing them in the midst of their career. So it's not like I go back once they've retired. So, but I would guess it's probably somebody like Stanley Druckenmiller who could probably a good example, which I think that's what he does. So I mean, he retired a number, I don't know how many years ago, 8 years ago, whatever. But his career is his own fund. I think he compounded around 30% per year for 30 years. I mean, really remarkable performance and just one of the great traders. So I think when he retired, so to speak, gave up, I think he still traded his own money. It's just like he just didn't need to be doing it for
Right.
everybody else.
Right.
So I think that's probably common. People pull money out and put it into different investments. That's all along the way, or they keep compounding their own money in their own account. And some people really take large chunks of their money and do philanthropic things with it, which is what I admire most when that occurs.
Wow.
Yeah.
Okay, well, Jack, I'm not going to keep you any longer. Can you tell us one more time the title of your book and where people can follow you?
Sure. So the book, the newest Market Wizard book, is Unknown Market Wizards. As far as following me, if it's Twitter, it's at Jack Schwager, just my name. And my website is jackschwager.com. So in both cases, it's just my name. Funseeder site is funseeder.com. And, the books can be found at any bookseller. And if you can't remember the book, you just put in my name and you'll get a list of books.
Jack, thank you so much for your time.
Sure. Take care. Thank you very much.